All right, welcome back for the episode of Carnivore Trades. Today is Monday, October 30th, 2023. If you've not done so already, please give the video a thumbs up, like, comment, subscribe to the channel. Come find me on carnivoretrades.com for swing trading alerts and analysis. Anyways, let's get into it here today. So markets here, getting a pretty decent bounce. So we had a gap up in the overnight, actually a gap up on the futures too. So if you look at the ES there, you can see we closed at 41.36 Friday, and we opened up today at 41.48. So about a 12-point gap. And then spiders here by the morning, again, closed just under 411, and then an open, right at that 413.50 handle. So a pretty sizable gap to open up the week. You can see we had kind of a minor pullback here. We had a fake print at about 10:30, all the way down to, I think, 408, about 408.90. So that's interesting. And there's been some notable exchange issues lately. Last week we had that options debacle in the morning. Remember where the ask was all over the map. It was like the ask was lower than the bid, and we had that issue here. And that was right around the time where I was joking about it. They're at that 4,200 level. I believe it was right here. Yeah, it was Thursday, and it's like they almost pushed it off of that just to, or I believe it was right here because it was 4,200. Yeah, so Wednesday they pushed it off of that level, and it was almost like they did that on purpose, knowing that's where the gamma was sitting. But at least that's kind of the tinfoil hat thing that was going around. But in any case, I talked about this Friday too. Look at Tesla, and this continued today. Those are all fake prints. Look at this on Tesla too. All of that fake print. We saw this on TLT as well on Friday. That was a real print, but those two are fake. So could be suggesting a further upside move here in bonds. But it's strange seeing all this happen at this time. I'm not sure, by the way, too, I'm looking at Amazon as well. That had a pretty nice day, up 4%. I'm not sure if that's a fake print either. I don't know if there was news that came out. I didn't hear anything, but definitely seeing some weirdness going on in the exchanges here. I don't know. Is it an omen here? We know that Yellen's issuing a lot of debt. Could be something to keep an eye on. But in any case, for the markets here, we did gap up. I did read that hedge funds were short for 12 consecutive weeks, and I think we're seeing some covering there. That's kind of why you got that nice bid. But again, markets were getting a little stretched. I talked about this on Friday. I still think we get down to 405 though, just so you guys know. I don't think this gap up is healthy. It's generally not how you're going to see a bottom. You want to see it on panic. It's a good bid here for the markets. Short term though, we'll look at 420. So that was your last level of support before we broke down. And then if you get through that, of course, the 200 and the 20-day moving average there are on the upside. Those are the levels that I'm going to be keeping an eye on here this week. One other little news piece too is the yen. So the JGB, or Bank of Japan, talking about letting that yield hold up. So that did bring the yen in down 40 basis points on the day on the dollar JPY. There's a lot of ado made out of it. It's a pretty good dump there intraday. Like if you look at it intraday, you'd think that this is a massive move, but when you stack it up to the run that we've had over the last year or so, it's really not that big. There's plenty of room for this to just tag 148 again and then continue higher. I just want to make that clear. And looking at the monthly, I would prefer, and I've told my members this, that this I would prefer it to pierce double top first before calling for some type of reversal. That doesn't mean it can't reverse here. And if that does reverse here, obviously that is a massive problem from not even just a macro standpoint, but from like a mechanical standpoint, as far as like the financial system plumbing. But in any case, that did kind of drive the market. By the way, I talked about the yen going to 150 in 2022, and nobody believed me, but I mean, take a look at this measured move here. 75 to 125. You add that up, 100 to 150. So that was a beautiful measured move going all the way back to 2011. But in any case, that did get hit last year, and now we're essentially, it looks like we're getting close to that double top. But again, that's a margin call that nobody wants if this really starts to rapidly decline. But something to keep an eye on. As far as the markets here in the short term, I think the market will take that as a positive. And again, like you said, we went into this area of support here, right? We broke out there, and no surprise we're getting a bounce. I don't think this is necessarily a low, though. We're not going to me, you guys know my thoughts. We're not going to bottom on a gap up, especially not that size of a gap. But the market did have a bid here. It's due for a relief bounce. It was getting stretched to the downside. And there is also a gap here, and you can see it on the spiders there. It's on the futures as well. An overnight gap too, right at 42.03. So if you guys follow the futures, we'll get that level, possibly even tomorrow. But again, we want to take this all with a grain of salt. What if we bounce up tomorrow and then Wednesday, Jerome Powell slams this down? What if we bounce up to 420 tomorrow, we get rejected, and then Powell slams this back down tomorrow? Like, let's not get too excited here about any sort of bounce just yet. We want to see a bounce and then a retest of the lows, a higher low. That's going to give you much more of a higher chance of legs into the end of the year. I'm already hearing talk about, that's it, end of year rally, lows are in, seasonality, right? I've been hearing seasonality since August, right? Oh, we're going to bottom here, seasonality. We're going to bottom in September, seasonal rally. We're going to bottom here, seasonality. So don't take it for granted here. There's still lots of problems out there. IWM is still showing horrible relative strength. Small caps are a good barometer of health and breadth. Again, if this is, I'm not going to say this 1,000 times, but if this is a new bull market, this should not be making new 52-week lows. And I mean, it's completely round-tripped the entire bull market rally that we're seeing. So we need to see this pick up the pace, and that has not happened. Additionally, KRE, I don't think the lows are in on this either, which is a big deal. VNQ made new 52-week intraday lows today as well. So commercial real estate is problematic still. Short term, though, I will give the market the upside bias here on the spiders to that 420 handle, and we'll just leave it at that for now. Triple Qs here. We'll say 353 here. I like the setup on the NQ a little bit better. At least right now, you can see that clear level, 14,600. Very nice level. I do think that gets hit. And then above that, we'll look at the 20 period moving average there. Of course, that's going to be a level of interest for the triple Qs here. Again, we'll say like 350. I'll say 354 to be safe there. So right in that area on the QQQ. And then there's your 20 period moving average. If we come down again and hit that 200, remember it's going to be minor because we've gotten close. And then if you put it, let's say we bounce up here and you put in another lower high, that can break. Just be aware of that. But again, getting a bounce here, we'll leave it at that. By the way, AMD earnings tomorrow, that will move the market. ON got smoked today, down 20%. We had AMD, NVIDIA, and a few other names kind of bringing up the rear there and helping out. And of course, Apple on Thursday, that's going to be a big one for big tech. The IWM here up 0.5%. Just looks like a bounce to me. Let's just leave it at that for now. The diamond here up 1.5%. I believe McDonald's had earnings, so up 1 3/4. That gave the XLP a nice bid there. But the Dow here, decent move. We'll see 331.50, and the 20 period moving average on the diamond should be good support. Remember, we did hit the head and shoulder target on Friday, and we closed below it. So again, this is not a buy level necessarily, but it is a downside objective. There is still a lot of support around 320 though for the diamond if we were to get down there. Semiconductors down 0.25%. Remember, ON doing a lot of work there, dragging that lower. Now again, you still notice what we're doing here on the 200. So we had a down move and we hit it. We got a 1 day bounce, and now we're red again. If this starts to flag and consolidate on that 200, it can set up a base for another move lower. Just be aware of that. If that happens, you guys know where we're going, right there to gap fill. And then just below that, right around 125 would be kind of your big support level there on the SMH. But again, we need to see that 200 break. It's going to take a few days of consolidation at least to set that up, but just keep an eye on that level there. It is consolidating above it. IGV up 1 1/3. Look where we went. We back tested that wedge trend line. We'll see what that does tomorrow. Short term, we'll say 341 or so will be kind of your resistance. You do have that red bar right there, but that was kind of your last minor breakdown pivot there. But IGV getting a bounce today, and we'll leave it at that there. Transport's also managing to get a bounce here. Again, we talked about 13.5. Look where we went on the weekly, right to that 200 week moving average. So that should be support. This is way oversold here. This needs to bounce. But it has been a laggard here lately. It did get a bit, up 2% on the day, so if needed to happen. You know where resistance is, right? So we'll watch this trend line. If you back off of that, bullish, you want to look for a higher low, and then bear is simple. You take out 13.5. There's going to be a lot of problems in the market if the transports continue to break down, but that's the level here we're watching in the short term. All right, over to interest rates here. So here's also a positive here in the near term, 2-year. It was green on the day, but I do kind of like the setup here for a possible continued pullback. If you kind of look at the hourly or even like a 4-hour, you got this down move here and you're starting to lose those moving averages. If this sets up and breaks back below 5, that could be a positive for the market, especially if the 30-year holds up. Again, we take a look at the yield curves here. There's 2 10s. That's not terrible, right? That looks okay. Trend is starting to turn back up here. And if you go positive there, I think the market will definitely like that in the near term. Bigger picture, that could mean a whole lot more. It could be signaling, recession, for instance. It could be signaling slumpflation, stagflation, that type of thing. But if that short end starts to shore up a little bit, it could help the market out. There's the 5-year. That trend is still up. 10-year trend is still up as well. Although I do think these long ends are starting to get a little long in the tooth here. No pun intended. I would prefer to see a little bit of capitulation. TLT, if that makes an all-time low on volume. And by the way, take a look at the volume here for the month of October. I think we're getting close here, right? So it's definitely getting there. It's the all-time low here, 80.51. And it is way overdone here to the downside. But I would prefer to see a little bit more capitulation. I will say, those fake prints should play out usually sooner rather than later. So if you could confirm this as a higher low and take out this pivot here and get above the 20, then things get interesting. Maybe back up to the 88 handle, maybe even 89.90. But right now, still kind of just struggling to get anything going. For a bigger, like a longer term type of low, I'd obviously like to see capitulation. That doesn't mean we can't have some type of a bounce here in the short term. Anyways, XHB up 1.4% on the day. That's hanging in there okay. I still think this has to get to 68. This is just the same thing over and over, right? Down move, retrace, down move, bear flag, down move, minor bear flag, down move, minor bear flag, down move, retrace, down move, bear flag. It is starting to look kind of like a down move and another little bear flag. I would feel a lot better around that 68.50 handle on the XHB. But I got a bid here today. We'll give the upside bias to 72 and then 73.50 area. VNQ we touched on a little bit earlier, up 63 basis points, but new 52-week lows. I don't like that. By the way, the monthly close is tomorrow. That's going to lose that 200-month moving average. Keep an eye on that. XLF here getting a little bit of a bounce, up 1 3/4. Nice pop there. So we'll look at 32.50 in the near term. And we'll leave it at that. When we talked about 31.50 as being support, it got there and it got a bounce. I just don't like the gap, really across the board on these markets. KRE holding up for now. Really just an inside day though. You got to get back above 40 to really kind of repair this chart. But that is still a weak chart, weak sector. There's KBE. Got to get back above 36. And then broker dealers here. Decent day, up 1%. Got to get back up to 470. And then 475 if we roll over. 440 area. All right, crude here down 3.5. So that did break that little trend line there. I really care more about this pivot though. 81.50. If we damage that, you'll have some support at this trend line. Again, so you can see that's been a level 1, 2, 3. Grinded on it, broke it, and then we got back above, back tested it. So we'll see if we can back test one more time. But after that, it's down really to the mid 70s if we can break through that area. But we'll see what we get here with crude. Nice little down move there. We'll leave it at that, down 3.5. Again, there wasn't really as much of an escalation over the weekend, so maybe that had something to do with it. XLE getting a dead cat bounce here at double bottom. I'm leaving this alone until 82. Too volatile of a pattern. XOP should have some support at 138 if it gets down there. And then the OIH here, diamond pattern. Finally filled that weekly gap, so that's a positive. But I can't do anything with this pattern. It's too much of a mess here. I'm just going to get rid of this. For now, we know what pattern it is. It's set up here. If this goes sideways, it could set up a move down to the 280 handle. CCJ here down 18 basis points, nothing terrible. Again, you guys know I'm in the camp. These are just doing weekly consolidation, so no real problems there. Let's flip over to nat gas. I like this adjusted chart right now since we've had all these big contract rollovers. I'm just using this, and you can see we had the big pop off the 20 MA last week. Big surge on Friday, then we pulled back in, just got overbought there, holding that 20 period moving average right now. I'd like to see this consolidate more, and if it does, this can push up towards that 4 handle. I really like what it's doing on the weekly. So we got back above that 50-week moving average. Nice little inside bar pattern setting up. There's also a gap all the way up at around 450. So that could be a target if we consolidate this pattern for a move higher. Dollar index pulling back in a little bit. I remember the yen kind of getting a bid, so that put some pressure down here. And that 107 area is holding on the DXY. We'll see what kind of pattern this puts in. We don't need this anymore. Actually, we'll leave that one on there, but we don't really need that top one. So we'll leave that there for now. It could be a minor trend line to watch. If you hold the 50 moving average and we firm up, there's nothing to say that this can't do weekly consolidation here. So just be aware of that. But DXY, that pattern's not terrible. I think it just needs to do a little bit more. And if that 20-week moving average catches up, I think this is set up for a move to 109. If this starts to break down and fails, we'll look at level by level, 104, 104.50, and we'll go from there. But, dollar pulling back today, no real major problems though, right? All right, gold here. So that backed off a little bit today. We talked about that level with the fib there, 2020. So 7.5 retrace, pivot high, and it is backing off. It's nothing terrible though. It's not like it's rejecting hard, but just minor little gap down, and it's just an inside day here. Again, if this consolidates, if you let these moving averages catch up, there is nothing to say it can't go higher. I still think it's a little overbought, even with that minor consolidation, but we'll see what we get here. Gold holding up. If we do, and this is the only thing that's kind of keeping me aside here, is that if we hold up, if we do go into a recession, typically, like the way it works is gold works, it performs really well ahead of a recession. It performs very poorly during, but it bottoms before everything else. And you want to buy that bottom because it usually gives you a parabolic move. And I think if that happens, we will go to new highs. But I'm being patient with it right now. But gold hanging in there, okay. I don't see any problems really. Silver also having a nice day, up 2.4. Still got to get above this pivot, got to get above 24, and then you can go attack the 25 handle. But not a terrible pattern. Need to get back above those moving averages there. Platinum here, a nice outside move up. So that kind of got a little bit above this channel. We can get rid of that. We'll leave this trend line on there though. So a big move there for platinum. Didn't quite get down to my level. But it is getting a bid here, up 4% on the day. We'll see. I'm not convinced it's necessarily over with yet. This is a thin market. So we'll see. 960 is going to be our next level to watch. But big move there for platinum. And again, we'll continue to watch that one for pattern. Palladium also up on the day, but pulling back in. This still needs to have one more drop in it. And then copper here, back testing our little wedge trend line. We'll see how that plays out. I still think that has to make one more drop. Lastly, Bitcoin's been holding up pretty well over the weekend, and it looks okay here. I just need these moving averages to catch up before we even discuss anything right now. But it did have a nice move. We had that outside move on the weekly, easily negating this red bar. So we'll give Bitcoin definitely an upside bias here. But I got to see it pull back before I let it, before I even do anything with it here. But Bitcoin holding up, it's trying to flag, trying to consolidate, just needs to do more of it, needs to let those moving averages catch up. And I don't see any issues with it other than it being a little overbought there. All right, lastly, again, back over to the spiders here. So a decent day. I don't like the gap up. I think it's just short covering here. Let's take a look here at the 420 handle. And then you've got the 200 and 20 moving average, kind of a little wedge as they're kind of converging there. That will be resistance. But again, everything that happens between now and Wednesday, I'm taking it with a grain of salt, because we have the FOMC coming up. We could surge tomorrow, and then Powell could smack this back down. Likewise, we sell off tomorrow, Powell could save the day. Just all depends on how he handles it. Additionally, there's also the kicker, which is the Apple earnings on Thursday, so keep that in the back of your mind as well. But again, short term, watch that 420 handle. I do think we'll at least test that at some point here this week. Anyways, guys, can wrap up here. You guys take care. Come find me on carnivoretrades.com. I will talk to you guys all tomorrow.